Imagine this: you run a small real estate corporation with your spouse. You pay all your payroll remittances on time, never miss a deadline, and suddenly CRA still sends you a penalty notice saying you made late remittances. Sounds unfair, right? That's exactly what happened to Sussex Group, Allan, Sutton, Realty Corp. Hi, I'm Amandeep Singh, CPA and founder of Cloudiverse CPAs Inc. in Burnaby. At Cloudiverse, we act like your Google Maps for corporate tax and payroll, helping you navigate complex CRA rules and avoid unexpected detours before they become expensive. So, coming back to the story, Allan and Angela Sutton ran a licensed real estate corporation in Vancouver. Angela was the managing broker and Allan the key sales agent. Together, they were the heart of the business. Every year, they estimated payroll during the year and then finalized exact salaries at year end based on who contributed what. And for 2018, they decided Allan earned 192,000 and Angela 165,000. Payroll remittances were made and T4s were filed. Then CRA stepped in. After reviewing their trust accounts, CRA said the payroll numbers did not make sense. They noticed that almost all checks except about 12,600 were deposited into Allan's personal account. Based on that, they decided Angela's actual pay must have been only 12,600, not $165,000. CRA then reallocated the salaries, recalculated the remittances, and said the company had remitted late, even though the total payroll money had already been paid. They added a 10% penalty, about 5,800, under subsection 227(9) of the Income Tax Act. Now, you might wonder, if CRA got all the payroll remittances anyway, why bother? Here's the catch. CRA just did not look at whether payroll was paid. They looked at who it was paid for. Each employee's income tax, CPP, and EI must match the salary actually earned. So when CRA believed Angela was paid much less, they thought the company had under-remitted for Allan and over-remitted for Angela. And because their correction changed the monthly remittance pattern, they called it a late payment, which automatically triggers the 10% penalty, unfortunately. In short, CRA wasn't missing money, they just believed the allocation was wrong. And under the law, a wrong allocation can still mean a late remittance. In tax court, the Crown had to prove that the penalty was valid, but they did not call a single CRA auditor or witness. Their entire case was built only on bank statements and copies of checks. The judge found that very weak and saying that CRA's review was selective because they never spoke with Allan, Angela, or their accountant. It was like judging a movie after watching only one scene. You see, Allan and Angela both testified openly. They explained that they both worked full time and that Angela had authorized all deposits into Allan's account. She used that same account to pay her bills and shared household expenses. Angela described it best: it was constructively receiving my income through our account. In tax terms, that means she did not need cash in her hand to be considered paid. If the money was available to her or used for her benefit, it counted as received. The judge agreed and said that Angela had constructively received her full salary. Because of that, CRA's reallocation was wrong and the penalty had no legal basis. The court allowed the appeal and wiped out the $5,858 penalty. This case shows how CRA can still question payroll even when you've paid everything correctly. The issue is often not when you paid, but how you record it. And for family-owned corporations, make sure salary allocations reflect each person's actual work. Keep clear documentation of how salaries were determined. If one person's deposits pay for both, keep written authorizations and notes explaining why. And of course, always reconcile T4s with payroll remittances before filing. At Cloudiverse CPAs, we help realtors, consultants, and family run companies avoid these headaches. We review your payroll setup, remittance schedules, and reconciliation so you stay aligned with CRA expectations. Think of us as your Google Maps. Thank you, and I'll see you in my next video. Until then, bye.